Good morning, everyone, and welcome to the Corporate Governance and Audit Committee meeting. My name is Councillor John Taylor, and I'm chair of this committee. I'm going to start by asking our members of the committee to just introduce themselves. We'll start with Kath.
Councillor Kath Pinnock.
Councillor Imran Safdar.
Chris Jones, independent member.
Councillor James Homewood.
Councillor Angela Sewell.
Councillor Caroline Holt.
Thank you very much. I will ask officers and other councillors to introduce themselves as they speak, rather than go through the whole host of people present now. Just checking, the next item on the agenda is, well, we haven't got any apologies, everybody's present. The next item on the agenda is the minutes of the previous meeting, which is the meeting held on the 6th of December, which have been circulated. Are members happy with the minutes, or are there any questions or comments on those? Is somebody happy to move them? Thanks, James and Imran. So that's item agenda 2. Item agenda 3, declarations of interest. Just remind members, if they do have any interests, that they can either declare them now or declare them when we get to the point where they realise they have an interest. And if they do, if they can fill in the form that's in the papers and hand it in at the end of the meeting. Thank you very much. Agenda item 4, admission of the public. All of the agenda items today will be taken in public. There are no private agenda items. Item 5, deputations and petitions. Do you have any?
None received, Chair.
Thank you. 6, public questions. Do you have any public questions?
None received, Chair.
Thank you. So we're on to item 7, which is the dates of the council meetings for the subsequent municipal year 25-26. I'm going to ask Lee if he can introduce this item, please.
Thanks, Chair. So this is a report that comes annually to Corporate Governance and Audit. It sets out the meetings for the next municipal year, and it's here really for yourselves to... The process will be that it will go on to full council for approval, so it's in front of you today for approval with or without amendment as it goes on to full council. So the dates are set out on page 2.
Thanks, Lee. I'm going to open it to members, if anybody's got any comments on it. Any comments?
I think I've raised it in previous years. You see, I don't think it's acceptable that there isn't an ordinary meeting of council in this diary of timetable of council meetings. An ordinary meeting from the 11th of February until the following July, and which is a 5-month gap. And if our role as full council, one of the roles, is to hold the executive to account, there's 5 months when that is not possible. And I personally don't think that's acceptable. Then I have another point. Yeah? So the key discussion items, who currently chooses those? That's a question.
So on both of those points, I fully support you. I would hope that we can find a way to hold a meeting in April this year, given that we have no elections, and also think that we should push for a further meeting, perhaps in June of this year as well, so that we haven't got that huge gap, as you've described quite rightly, Catherine. And as you quite rightly said, we raised it last year, didn't we? So hopefully we can get to a position where we can get that. I'll come back to that. In terms of the key discussion, again, I've raised this with the Chief Executive, and I have agreed that we will bring suggestions for key discussions to the senior members, what do we call it? Senior leadership meetings, where the meetings of all the political parties meet with the Chief Executive to discuss what might be brought forward as a key discussion document. So it's one that isn't done just by the administration, but it's cross-party.
So currently what we're saying is, in the meeting where 69 councillors have the opportunity to hold the executive to account or discuss a matter of key importance, the Cabinet choose that key discussion?
No. It's an agreement cross-party through the leaders of the political parties.
Currently?
That's what the plan is. They haven't
Oh,
been
no,
doing
no,
that.
currently, though, it is. What
Currently,
we're
it's
saying.
been the Cabinet, but
That's
there's an agreement to
outrageous.
change that.
So that has to, in my view, that has to change, and I look forward to that being changed before it goes to council.
Does anybody else have any comments to make on... Thanks, Jane.
Just a quick one. So obviously, Sam, you're aware, obviously we've been having the discussions around the Constitution Working Group, and then obviously that'll come back to the corporate governance audit in terms of some of this stuff around what's in, how the meetings work and what's in the meetings. And I'm just wondering, I don't necessarily know that's going to have an effect on the number of meetings or when these are, but obviously I know, for example, we've been discussing things like, well, what does it mean to hold the executive to account? What is a key discussion? So actually, that group could determine and say, actually, we should only have, you know, 2 holding the executive accounts, either should be key discussion or vice versa, that recommendation. So would that then change what happened? I'm just wondering why we're looking at why it's now that we have this paper. Do you see what I mean? Rather than with all of the constitutional changes and stuff.
Yes,
sorry.
Oh, sorry, you're going to come in.
I was just going to say, I mean, this is an annual report as things stand, so obviously we alternate between key discussion and holding exec to account. Anything that subsequently comes out of the Constitution Working Group would be, depending on timescales, whether it went to annual council this year, it'd probably be too late, but it'd be implemented the year after, I would imagine.
And I was just going to add to that. My name's Samantha Lawton. I'm the Service Director for Legal, Governance and Commissioning. We have set up a Constitution Working Group. We have been looking at council dates and having those discussions. Sort of some of the challenges around having a June meeting is when we have an annual council so close to it and making sure we can put everything in place with a June meeting. So there is some concerns about whether we're ready to have a June meeting for council. Nothing wrong with an April one. But the report today is about 25, 26. But if you wanted to vote for a meeting today for April, absolutely fine. I think I'd have to go away and have a look and commit to see what work we need to do to make sure we're ready for a council meeting in June. And the discussions around how we better spread council meetings and whether they are holding exec to account or key discussions, those discussions are undergoing with the Constitution Working Group now. So I'd hopefully have an update position when I come back with the Constitution report in, I think I'm here, Nicola, in March, with all the Constitution reports going forward, which will include the council procedure rules, where it sets out the rules for the meetings. I don't know if that helps.
So, the bit I don't understand is why having an AGM in, towards the end of May should cause any problems for us holding a June meeting, because they're very, very different. And my other question is why, given that we have a fallow year this year, given that we have a fallow year this year, I don't understand why you couldn't bring forward the annual council meeting to a slightly earlier date to give a bit more room to allow a June meeting. Because the concern for members is the ability for us to question the executive. And I don't understand why, if we've got no elections, it's got to be the 20th of May. It couldn't be, say, the 13th of May, and then have a meeting a month later in June.
Annual council also determines the term of office for the mayor. So we'd need to have a look at that, because that may mean moving the term of office of the mayor. So it's slightly more complicated. When we get to council and we know who's nominated to all the different boards, when we're asking questions of who's committee chairs, who's on what board, Wicker and so on, that can take some time to do that, because it's not just us doing that, it's us liaising with other outside bodies as well. And those discussions do take time. We then go off and have meetings with the GBMs and so on, and they're not always resolved immediately. They do take a little bit of time. That would be my concern around it.
I mean, I do understand those challenges, I do. I just think we have to find a solution where we don't have a 5-month gap between ordinary council meetings. Now, I mean, we used to have one in April, early April, before nominations closed, to try and take that sort of more electioneering type stuff out of the meeting. And if I remember rightly, procedure rules were altered so that you couldn't have public questions and all the rest of it, because it became I think that's why it got dropped, because it became an electioneering platform rather than a council meeting. But you could arrange the procedure rules to do that. So you could, I think, have one in early April. And then one in late June. I mean, it's just not right as it is all I'm saying. And if other councils manage it, so should we. And I shall say no more.
I think the other question then also is, if there is a problem, and certainly in 2026, we do have elections, so you might have concerns. But is there a way to change the budget council back to February? So then you have a March meeting where there is an opportunity to hold the executive to account. Because that's what the problem is. By moving the budget meeting later, you've extended the period of time where there's no opportunity to ask anything. So I think, I would prefer to ask that we go away and look at the dates again before we take it to council.
Okay.
And that we look at a way in which we could have a meeting in April this year. And I know that's within the current year.
Yes.
Rather than this report, because this report looks at post
Following year.
the following municipal year. And so I'd move that we don't accept this report. We don't recommend it to council. We ask that we go away and look at it and take on board some of the concerns that have been raised by members here today.
Okay.
And perhaps bring a paper back. I mean, we've got another meeting. When's our next meeting? February. In February. Would that work? Because we could take it to the budget council meeting, because we have done things before where we've taken another report to budget council, and that would give us the opportunity to do that reflection piece, and let's get the dates lined up.
Yes, we were just discussing amongst ourselves. The only option then in terms of taking it to council would be budget council. So I need to go away and speak to the chief exec, because it will be down to, there's a requirement in the CPRs for any additional reports that's not finance related to be agreed by the chief exec and the mayor. So,
Right.
But I agree that we need to find a better spread of meetings. I don't disagree with that, Councillor Pinnock. I think it's just how we do that and what years we do that and when that is. So that's fine, we'll take that away.
So I've made a suggestion. If I'm sure Councillor Pinnock will second that for me. Yeah, thank you. So, members, are we happy that we ask officers to take this away, have another look and bring another report back to us? Okay, you okay with that, Sam?
Yeah, that's fine.
Thank you, members. That's me. I'll move on to item 8. I think that's back with you again, Lee, isn't it? I think at this point I need to declare an interest. So the report we're about to talk about does mention specifically the Chair of Corporate Governance and Audit in members' allowances. So I think I definitely have an interest. I just think, so I just declare an interest.
Yeah.
As I am the current chair,
Yes.
it obviously has an impact on me personally.
Yeah, Nicola notes that purpose in the minutes. Thanks.
Okay, thank you, Chair. So, yeah, this is the report of the Members' Allowance Independent Panel. Just by way of background, you'll recall that a previous report came just before Christmas, where it had looked at the allowance scheme and highlighted a couple of areas that they were going to further examine with a view to coming back here and onto full council with recommendations. So the issues they were looking at related to Chair of Corporate Governance, as Councillor Taylor's just alluded to. They were also looking at the fostering and adoption panels and also considering the issue of group bandings. So you'll see in the report, the recommendations are set out in the allowances report. They have recommended an increase in the allowance to the Chair of Corporate Governance, an increase in the allowance to the fostering panel members, and also to the adoption panel members. As part of the process, they heard from the current members, current chairs, officers, and made the recommendations based on that. With regard to the group bandings, that was an issue that they'd highlighted to look at because there was a suggestion about paying a flat rate per member against that. That was considered, but discounted by the panel. They felt like the current scheme offered a robust system in terms of the group bandings and the smaller groups and the number of groups we have in Kirklees. I think as a general point, most members that came felt that the scheme was robust and didn't really require much amendment. As I say, these particular issues that they focused on this time were around Chair of Corporate Governance, which I think what came out of that was they recognised the importance of this committee in terms of what it does, its role, its function, the signing off of accounts, and obviously the work with internal and external audit. So that was recognised, and it was felt that banding should be increased. So as I say, the recommendations are set out. In terms of process, as I say, it's an independent panel. They've come to their view. It comes here for yourselves, and then it will go on to Council in February. Ultimately, it'll be for Council to decide. Thank you, Chair.
Thank you. Open that to comments or questions from members. Right. So are you both declaring an interest because you're members?
Yeah, I'm on the adoption panel.
And I'm on the fostering panel.
Can you fill in that piece of paper that's in the and pass it to Nicola? Any other comments, James?
Yeah, I just say that I'm in agreement with the changes, and obviously I contributed to the one on the Corporate Governance and Audit Committee. I think it's the right thing. I think it was a very strange situation that you had a committee chair with a lot of work to do, a lot of meetings and a lot of responsibility, was for some reason at a much lower banding than other similar chairships. I couldn't really understand why that was. And I think it's not really about the specific allowances for individuals. It's about having a robust system because you want the best people to take the roles, to go to the roles that are the most important. So I think it's about the long term, making sure that happens in the long term. So I think that's right. The other thing I just wanted to check is, it talks about, I know we're not talking about massive amounts of money, but the financial implications, it just says, this is covered in the existing budget, but obviously all of the changes seem to increase the cost. So I just wondered, I guess there's some flex within that budget because obviously you don't know how many groups you've got and how many people in roles, but...
Yeah, just to come back on that, there will be allowances that are kind of abated. So where one member has sort of two positions, that results in an underspend. And that happens on quite a few occasions. So there is a little bit of flex within the allowances scheme that will cover any additional costs from this.
Any other questions? Comments? We're asked to note the report and recommend that council approves the recommendations. Are members happy to note this report and accept the recommendations? Okay, thank you. So I'm going to move on to agenda item 9. I think, James, are you doing this one? Is Rachel doing it online? Hi, Rachel.
Thank you, Chair. Hi. Good morning, everyone. I hope you can all hear me because it was a bit crackly earlier on when I logged on, but it seems to be all right now. So I'm Rachel Firth and I'm Finance Manager in the Central Accountancy team. I manage producing the annual statutory accounts, external audit of the accounts and the treasury function. So this is the annual treasury management strategy, which the Council must produce before the start of each financial year. And it sets out the parameters of how Treasury will operate in the next 12 months. I'll run through the report briefly. Some of it is a bit technical. So I'll start with the economic background. Current interest rates are 4.75%, which has dropped slightly from the peak last year of 5.25. There is a Monetary Policy Committee meeting next week, so an MPC meeting, where there's probably going to be further reductions, probably, I don't know, 0.25% maybe. Inflation was 2.5% in December, down slightly from 2.6% in November. And latest estimates are forecast to hover around 3% during the year. The recent news on the water bills going up 20% will also push up inflation. The effect of the autumn budget on economic growth and inflation has reduced the expectations on the pace of interest rate cuts. And our Treasury advisors, Arlene Close, expect the MPC to reduce rates throughout 2025, taking it to around 3.75% by the end of March 26. Yields will remain relatively higher than in the past due to quantitative tightening and significant bond supply, resulting in lower bond prices, pushing up yields higher. Financial markets and short-term yields are always volatile due to economic and political uncertainty and events. So the higher interest costs or the high interest rates will give the Council higher investment returns, but significant higher borrowing costs. So investments at 31st of December, the Council had 36.5 million of investments, and the SIPFA code requires the Council to invest its funds prudently. So this report recommends a low-risk strategy, ensuring security of the Council's cash, but also ensuring liquidity, so funds are available when needed. Balances of 20 million are recommended in short-term liquid investments to manage day-to-day cash flow requirements. And these are mainly invested in money market funds, the Debt Management Office, which is a government department, and other local authorities. So all these are considered secure investments. 10 million is still invested in the CCLA, which is the Local Authorities Property Fund, diversifying the Council's investment balances. So total amounts to remain about the 30 million mark. Cash balances may be higher than this, dependent upon the timing of when we take out loans. Appendix A highlights the investment criteria and the counterparties, showing who the Council can invest with. And Appendix A also shows credit ratings from 3 different agencies, which are used to assess risks of defaults. So these counterparties are regularly monitored by officers, along with the Council's advisors, who inform us of any that have maybe have been downgraded, and any that do not meet the investment criteria won't be invested in. In terms of borrowing, the Council had 746 million of borrowing at 31st of December, and Table 1 shows the capital financing requirement, which is the CFR. This represents the Council's underlying need to fund capital expenditure by borrowing or other long-term arrangements. And the loan CFR is significantly increasing from the impact of the capital plan, and in particular the cultural heart and the regeneration programmes of the town centre. So the liability benchmark is shown at paragraph 2.14. This is a prudential indicator, and it shows if the Council will be a long-term borrower or a long-term investor in the future, and so to shape decision making and strategic planning. The liability benchmark, it represents an estimate of the cumulative amount of external borrowing the council must hold to fund its current revenue and capital plans, but trying to keep cash at the minimum level required for day-to-day cash flows. And it shows the council is estimated to hold 1.1 billion of borrowing at 31st of March 28. And at paragraph 2.15, it's also shown as a chart, which I think is easier to read because it's comparing the council's existing borrowing in a sort of a graph form. And the red line is the liability benchmark reaches a peak in 2031, and the grey line is the existing borrowing, which you can see reducing over time. And the area between the two is the gap required to be funded. And the CFR will start to reduce as MRP becomes chargeable on those assets, moving from assets under construction into operational, such as the Cultural Heart. And the chart extends 50 years, so you can see the full effect of the plan and how the gap does reduce over time. So the borrowing strategy. So the council's approach over the last few years has been to take a combination of long, medium and short-term borrowing to ensure a balanced risk approach. During the 9 months of the 24-25 financial year, the council took 50 million of medium-term EIP borrowing from the PWLB, which is the Public Works Loan Board, and we took 30 million of short to medium term maturity borrowing from other local authorities. Short term rates are high but are expected to fall slowly the next few years. Today's short term rates currently 5.75% for around 3 to 4 months of borrowing. Slightly cheaper for 6 months, that's about 5.6%. Long-term rates from the PWLB remain high, and today's rates 5.87% for a 30-year EIP loan, 6.05% for maturity. And the best of the yield curve on that borrowing chart is currently 5 years EIP, and that's at 5.15%. So the council, per this strategy, will continue to take a combination of long, medium and short-term loans, diversifying the borrowing and the maturity structure of the loans, and try and be cost-effective as possible to try and remain within the budget. Short and medium-term loans can be refinanced when rates are lower. The council does have a large borrowing requirement, though, which will ultimately require long-term borrowing to match the long-term assets. The council holds 30 million of low-bow loans, and these are where the lender has the option to raise the interest rate at set dates, following which the council can either accept the new rate or repay the loan. So if these are called, the council will repay the loan and borrow from the PWLB to replace the loan. And the council may also prepay or restructure borrowing for revenue savings if risks are minimal. External borrowing is forecast to be 793 million at the end of March 25, and the table 1 shows the council is estimated to borrow an extra 361 million by March 28 to fund the capital plan and replace some of the internal borrowing, so use of reserves. So those are big numbers in terms of the borrowing required. However, the borrowing costs, they do feed into the Treasury budget, which is included in the council's revenue budget and financial plans. So that was highlight of the main points of the report, and there's appendices at the back showing the counterparties, an updated MRP policy, the Treasury performance indicators and the investment strategy. So that's just a main points. Does anybody have any comments or questions?
Thanks, Rachel. I wonder, before I invite members with their questions, I know there was some discussion earlier about the MRP policy, and it might be worth you just explaining our current policy in a little more detail to see if that answers some of the questions that we may well be anticipating otherwise. That's okay.
Sure. Yeah, I'll just get it up in front of me. So, I mean, I think it was explained at the outturn, and it was explained, I think, at the 6 monthly where that was presented. We had independent advisors review the current policy and recalculated the policy. What they've done is taken general fund supported borrowing up to 2007-8, and they have applied an annuity factor of 34 years on that element of borrowing. And then unsupported borrowing for expenditure up to 31st of March 23, it's based on an average annuity rate on an average life of the assets. That's like on a weighted average life basis. So that element of the historic CFR is based on that part. And then an expenditure from the 1st of April 23 is based on, again, we're using a weighted average life of the assets that the expenditure has been used to fund. So that will what will happen every year going forward. Is that okay?
Right. Well, I'm going to open it now up to questions. So who wants to start? Chris?
So my question's on MRP really, and I think at the last meeting I asked some questions about the degree to which the revised process was more or less prudent than what had gone before. I think I've got a clearer answer now from the external auditor's comments on the current process, which is that it seems at the riskier end, apologies for misquoting what you've said. So I suppose it's important for those who have to approve this strategy that everyone understands what that means. And therefore, I think, I haven't kind of said this before, but it's probably my mistake, but if I look at the report on page 32, it says financial implications not applicable, options considered not applicable. And it just strikes me that when this goes forward for its final approval at Cabinet and Council, it might be helpful if there was some more financial information in those sections and be clear about what options had been considered so the Council can make a decision in a full set of knowledge. I do think the overall strategy is really clear, and I'm happy to support it with the exception of MRP, because I don't think there's, given those 2 points, there's sufficient information for people to make a decision on without being clear what the financial implications of the revised MRP strategy is and without being clear what options have been considered and why they've been rejected. I think that's kind of fairly basic report writing and good management stuff, really. So with that, those provisos, I'm happy to support the strategy.
Thanks, Chris. I'm going to bring Kath in first and then ask officers to respond.
I mean, one of the one of the issues is the MRP policy, which is also raised in the auditor's report, that the change was made without full council or council approval. It says it's not clear to me whether that cabinet approval was achieved, but didn't go to full council. I don't know. It's not clear from the auditor, so it might be worth knowing what that is. It's also be interested. A question for Rachel about you talked about the weighted average life of assets, and it's, of course, what we need to know is what's the weight. I mean, I'm like Chris, concerned that quite a big change in this approach to judging lifetime of assets and how it's funded has been made without the full implications being clear. That's the comment on that. There's some of the issues in here actually picked up in the audit report, and I think I probably raised them there, but that is raised in the auditor's report, so it is one that we need to think about quite hard. The other is, you know, we always get these graphs over the years, the one on page 26, where it shows everything nicely going to zero after about 50 years. Of course, it doesn't take into account that councils will add to that grey bit at a regular basis, well, for sometimes for very good reasons, often for very good reasons. So, you know, we fool ourselves if we think that that's in a necessarily downward path after the peak of, well, 2031 or whatever it is. So, you know, the only bit of the graph worth looking at actually is the peak and the gap, and that is a bit scary, I have to say. The auditors also raise the issues that are put in 211 about the the extent of the capital borrowing. And I know Rachel has said that it's funded in the revenue costs. It would be good to know an actual figure for cost of borrowing, the financing cost.
Yeah. We do quote that, it's in the capital strategy, which will go to council. Because one of the prudential indicators is a financing costs and net revenue stream, and it's quoted in that table. Hello, can you hear me?
Yeah, I don't know whether...
Yes.
You probably haven't seen that yet.
I'm going to suggest, Rachel, that if perhaps yourself and other officers just respond... Kevin, are you? No, James? Just to the comments that have been made by both Chris and Kath, if you may.
Okay, thanks, Councillor Taylor. So I'm Kevin Mulvaney, Service Director Finance. Just in response to Councillor Pinnock's question about the actual costs, I've asked for those this morning. Following we had other correspondence about that. Oh, sorry. I've asked for that this morning. We've had other correspondence about that, and I'll provide you with that. Yeah, thanks. And James will pick up the MRP point.
Hi everyone, it's James Anderson, Head of Accountancy. There's probably I think we do the actual budget side of it, does go in the 6-monthly report as well. So I'll probably be able to find out while we're here. A couple of other things. One, in terms of the MRP policy, that will have been done last time. And so when we set the policy, because obviously we did this restructure around this time last year, so it entered into 23-24's accounts and sort of did its process then, and obviously external audit have made reference to probably some of the things, the governance side of it. So that's when it came in and was sort of implemented, and this runs it through now. So every year we'll do this exercise and we'll recalculate what the MRP charge should be, and we will, sort of as part of the comments back from external audit, we'll sort of explicitly make clear what we've done in the working papers to support the outturn treasury report and the 6-monthly one, and it'll drop into the strategy as well. Then there's a comment about the weighted average, and that's literally looking at everything all the assets you own and the asset lives that are attributable to them, and coming up with an average. So it's a formula and a massive bunch of workings that lead into that. So it is exactly what it says, a weighted average. And so that's how we will calculate that bit. Have I covered everything, or are there any other bits?
I think the question, I'm not sure we've clearly answered, James, was, and it's perhaps because the policy was changed last year in terms of MRP, and whether last year, and I'm trying to recall, I don't remember the 50-year thing, but whether we've set out clearly enough for this committee what the other options were and what the financial implications were perhaps. Because my non-technical take on it is that where we are at the moment with MRP is it's the right side of the line, but it's probably quite close to the line in terms of the level of risk. And we may well have done that because of our financial situation. So what I don't think members have had is perhaps if we'd been more prudent, what would have been the financial cost of being more prudent now? Because in a way, by adopting a higher risk approach, in effect, we're pushing the problem a little bit down the line. And that may well be the right thing to do, because the alternative is perhaps cutting service further now. So, you know, it's always a judgment, but I don't think we've had, through this committee, certainly I don't recall, that, you know, these were the options we could have gone with, and this is the consequences of going with those options. So had we taken a more prudent approach now, it would have required a larger MRP now, which would have meant there was less money available in this year's budget to spend on other stuff. And perhaps that's something that perhaps we could ask that is brought back to this committee, just so that we've covered that off. And I think, I'm looking at members, I think that's where we were thinking, wasn't it?
That's exactly what Chris has
Yeah.
asked for, I think, and
Yeah.
in
And I
my
think,
simple way also.
yeah, I think Jane.
No, I think that was a really good summary. I think for me, just reflecting on what the discussion that's been had is that I think where we go for it is that we've had lots of reports with lots of information in them, but as whether it's this committee or the council or the cabinet or whoever, I think what we need is when on something like that is, rather than saying, well, it was on page 272 of a report, we need you to pull out for us where the risks are and where they're being taken a little better, I think, because I think on this MRP thing, it's quite complicated if you're not really close to that. So actually pulling that out and saying, we've made this change, this is the additional risk there might be, but these are the reasons, as Councillor Taylor's just said, I think would be really, really useful so we could understand the context a little bit better. I'm sure it's actually all there in the reports, but it's just, if you're not an expert in that little bit additional kind of pulling out an explanation, I think would be useful. So I think if we could have that, it would help.
Thanks, James. Graham wants to come in. So
I'd just set a bit of context around MRP. So many, and it is a good few years ago now, is we found that we actually had quite high MRP. Going back when we had a different Section 151 officer, we looked at that in detail. And at that time, many councils had been reviewing their MRP provision, and a lot of them had reduced it. But we waited a little bit. We didn't do it as soon as most of the local authorities. But we did have too much. So you're right, it's quite marginal, but going from being really, really prudent and risk averse, we've gone a bit, perhaps it may have gone a bit too much risky, I don't know. But that's the reason we did it, because we were way over at that point in time. So that's how we slowly got to this point where we got to now.
thanks, Graham. James?
I suppose trying to simplify something that is very technical and has its own way, I suppose like what the process have done is you're looking, I guess, I liken it to buying a house, and you pay interest on, you get a mortgage, you pay interest, and some of it will be a capital repayment. And it's that capital repayment bit, so the interest bit will always go through the revenue budget. What we have to do is look at that capital bit, and like a house, you may have if you take things of bricks and mortar example, it probably works best. If you buy an asset, a house 10 years ago, and in that 10 years, the value of it may have appreciated, and you may want to look and go, well, actually, my house that I paid 100 grand for is now 150. So do I need to have paid back when I've got a loan here for 100, then I'm trying to weigh up the value of the asset with the value of the loan that's attributed to it. And some of these things will go up, and there will also be a time value of money, where money in 10 years, because of inflation, will be less than money now. And it's sort of morphing those two things into one. So when we look at weighted average life of an asset, it'll be, well, we'll look at this building and go, well, from where it is now, how long? We may have said it was, probably in accounting policy sense, you're saying that's a 50-year asset. It's probably as long as it gets. And so we may attribute PWOB and the MRP on that. You could do a straight line and say, we'll pay 1/50th of the capital off every year. And that was one way of doing it. And then you could have had 4%. So there's lots of things that well, they were prescribed at one point in time. But now there's a lot more options for this, accepting that property values have increased quite a lot and time value of money is decreased, what you started with anyway. So our way now is really looking at those two things and saying, well, actually, if you've got a 200 grand asset and you've got a 100 grand loan and you've paid off 90 grand, do you need to continue paying the 10 grand? And it's really, that's the nub of MRP really. And so all the workings are very complicated, and when we get Link and Treasury advisors to do it, they're into the bare bones of the detail. But the sort of the simplest way is thinking of it, well, I find it, thinking of it like your house. And would you carry on paying it if the value of your house is 200 grand, not 100, and you've already paid 90 off? So would you continue paying all that in perpetuity? I mean, we can take on board what you've requested, and I mean, in a wider sense, it's like depreciation and other accounting estimates. You're just trying to find a reasonable way of charging revenue costs to something, and so you're shifting a debt off your balance sheet.
I'm going to bring Kevin in if I like.
Yeah, thanks, Councillor Taylor. Yeah, we'll take on board the committee's request and we'll bring a paper back outlining the effects of the policy that was agreed at the end of 23/4, I think. And you are right, Councillor Taylor, that there were significant short-term revenue benefits for the council to do this, to avoid, finding other savings. There are long-term consequences, obviously. So we'll bring a paper back. It's briefly mentioned in the December Treasury Management report to this committee around the total over provision, but taking on board Councillor Hobart's point, it is in one of the appendices. So we will come back with a
James?
clarification.
Can I just ask a quick, and again, this is, James, I know you were trying to explain, a more kind of an understandable level how these things work, but and I don't want to, your analogy, but isn't the difference though that when you've got a house, you've got one asset and you kind of know how much that asset's worth, but we're talking about significant borrowing to build, say, cultural heart. I mean, the risk of that must be a lot greater than having one asset which you know how much it's going to... how much... Do you see what I'm getting at? So it's like... I'm not saying that's the wrong answer, but do you see what I mean? That's, I think, why it's a concern, because we're saying when we're looking at the graph before, we've obviously got, the capital investment plan is a big part of our strategy. It costs a lot of money. We need to be really careful about it. But at the same time, we're taking a decision which might be seen as being less prudent. Do you get what I mean? And I think that's the challenge. It's not like it's just the same asset that we've always had, and it's worth more. Why would we want to the same contingencies before?
Probably on that, the other thing to remember is what we did a couple of years ago as well. We did change, so we only bring in cultural heart assets once they're in use as well. So that will hit, and it will be something that you'll start charging for it when it's using its useful life. So we're not, although we're borrowing for it now, we wouldn't be charging MRP on that asset. So now it's really it's far more focused on the assets, In a nutshell, you're very right. It's what we've done is look for a revenue saving in a short-term benefit for the council to support the wider budgetary issues and service issues, and accept that there is a little bit of a benefit now, but then it soon runs out and there will be increased budgetary requirements for revenue costs for this. And we see that coming, we can see that in our figures, and it's very soon, and it balances itself out over a longer period, with the benefit now and the extra being a smaller amount that will come in. So it's kind of timings is the real benefit to supporting the council. But no, there's no two ways about it. You're sort of looking at the technical stuff and aligning that to the wider budgetary things that are going on.
Thanks, James. I'll just bring Cathy.
I mean, thanks, James, very much for... I mean, it is very technical, I accept that, but I do think we ought to recall that quite a lot of the council's capital expenditure loses its value completely within a period of time. I'm thinking of highways and so on. So that presumably is all factored in. So it's not like your example of a house, indeed. So just the problem with this is you can't look at MRP on its own, and we need to understand it in the context of the capital plan, the revenue budget, risk, all the rest of it. And the problem with this is that is not in front of us, which is the point Chris made about half an hour ago about the general financial and legal implications. So that's what we need to see.
Right. So we're in a position where we have a number of recommendations that we've been asked to approve, and sort of recommend that this then goes forward consideration of Cabinet and full Council. I just want to ask a question. If we've got some additional questions around MRP, are we able to approve this but not approve the MRP line, and ask that that comes and gets approved once we've had further information provided? I don't understand technically if we've got to get... I know we have to have the Treasury Management and Investment Strategy approved before the end of the municipal year. I'm just looking for advice on how we navigate this one.
Hi. So the MRP policy has already been approved, so we're not changing from 23.4. We're not changing that policy at all. So I think your request for additional information is fine, but it wouldn't change the recommendations in this report.
That's fine, but you're asking us to recommend the policy provision of MRP as outlined in Appendix C. And we're not comfortable with doing that at the moment until we've had a bit more information. So that's where I'm struggling, because you're asking us to recommend something that we're saying we'd like a bit more information before we can say we're comfortable with that. Gareth, do you want to come in?
Sorry, Chair. I think that point sort of links into the findings in our two reports on MRP, because I think what we're essentially saying is that for the decision that was made in relation to 23-24 when that change happened, what you're asking for wasn't available. So it may well be that that change that's now already in place, retrospectively, obviously Kevin and James do know the implications for that change that was made, but it's already been made, Chair. So that's, I guess, kind of where our commentary's coming from on MRP. Just a couple of points, if I may, Chair, on this as well. I suppose your summary some time ago on MRP is, I suppose, essentially where we're at on it, that it is permitted what the council has done, and sorry, I don't know the gentleman's name in front of me, but essentially you've moved from a more to a more you've got less prudent and you're closer to that line. I suppose what that does mean is that with all the additional borrowing that's obviously coming online that Rachel's just talked through, the ability to take further steps on MRP aren't really there, because you are quite close to that line and you've got a lot more borrowing coming online in the near future. So that's just something for members to, I suppose, keep abreast of, because MRP, nationally is quite a interesting topic at certain authorities that have taken certain decisions around levels of borrowing and reinvestment and all the rest of it. So it is something to keep aware of. I suppose the only final point I would say, Chair, is that whilst it is similar to depreciation in some respects, MRP is actually a proper charge that hits sort of usable reserves and ultimately needs paying for. So that's just something else to keep in mind. Thank you, Chair.
So I'm still a little confused as to what we do today. Because if we look at the first page of the report, there are 5 bullets that we're asked to recommend to Cabinet and Council. Page 21. The Treasury Management Strategy, the Investment Strategy, the Treasury Management Prudential Indicators, the Investment Strategy, Appendix F. But then in the middle, we've got the Policy for Provision of Repayment of Debt, outlined in paragraphs 2.39 to 2.4 and Appendix C. And that's the one where we're not feeling entirely comfortable. Sam, do you want to come in?
I was just going to come in to suggest maybe that should actually be a note rather than a recommendation. Yeah, that you note the provision because it's already been approved rather than, and we'll make that amendment.
So that would mean we were approving the other 4 bullet points?
Yes, and noting that one.
Noting that one. Chris, you wanted to come in?
So I think the External Auditor's report said this hasn't properly been approved in the past by Cabinet and Council. So presumably it still has to be approved at some point. I'm not sure we're helping them if we're merely noting it. But my request was that when it goes forward for approval, if it's going forward to Cabinet and Council for approval, there's some more information attached to it so that those who are approving it have got full transparency on the implications of what it is they're approving. My only issue at the moment, I'm not saying it's right or wrong, I just don't feel we have enough information about the consequences. And it's my failing. I didn't ask this question 12 months ago because I don't think we had the right information then either. So I think it can go forward, can't it? Just with a request of some more information, so those who do have to approve it get the right get the full picture.
It has been approved through full council. I think what they're suggesting is perhaps it wasn't approved at Cabinet, and perhaps there wasn't sufficient information when that approval was made. So
but
it's been through a form of governance.
Yeah.
Sorry. And these are the implications of those other options, and we're recommending option whatever. And I suppose that's our point, and I think that's what you as members are looking for now.
And that's what I think they're going to bring back to us. But the policy's already been approved.
Can I suggest that we agree the recommendations with a caveat that says that the committee was concerned that not all the information was available to make a informed decision about the MRP, or words of that to that extent?
I think the problem is we're not being asked to approve the MRP because
Well,
it's already,
whatever
this
we're
is the problem, it's
asked,
already been approved. I think noting the policy and expressing your caveat,
Yeah.
absolutely, would
So
be the
whatever
way
we're-
to do it.
Recommend the following for consideration by Cabinet. We agreed that, and then, but with the caveat, with the note that Sam said just a while.
So we agree 4 of the 5 and we note the one on MRP. But in that note of the one on MRP,
We all of them, but with a note.
we're not recommending. So this asks us to recommend for approval by consideration for Cabinet and then approval by
Yeah, but
Council.
if we do that, but add the note, it will be clear that there was concern about the MRP
So
element.
the suggestion is to recommend for consideration of Cabinet and approved by full council bullet points 1, 2, 4 and 5. Right. And for the middle bullet point to note it with a caveat that says we feel that we didn't get sufficient information, ask for something to come back. That's how we're going to propose to do it. James?
Yeah, sorry, I don't want to continue too long, but just to clarify, so we've said on that point that we can just note that point, but when it goes to full council, is full council approving that MRP outlined in paragraph? I'm just trying to say, because what I'm thinking is that ultimately when it comes to council relies on us, that we've done something to assess this and pulled out there's a problem, so you might want to, or there's not a problem, or whatever, there's something you should be aware of in making your decision, because they're going, well, I've got 300 pages here, which bit is pertinent, and what we're wanting to make sure is that when the council's making the decision, I mean, I don't really have a problem with the overall decision, it's just that they're aware that we had this discussion and that this is what, this is the route that we've taken. And so that in 5 years' time, when something happens and someone says, oh, well, it's because you changed your MRP provision, that everybody is fully aware that happened, the discussion was had, we understand what the implications were, and that was how we proceeded as a council.
So the opportunity that we have, and I'm looking at officers here, but the opportunity that we have is from here, the next place this goes is Cabinet. So I'm hoping that by the time it gets to Cabinet, we could have with these papers the report that we're asking about that gives a bit more detail, so that when Cabinet consider it, they've got all the information in front of them, and then when it gets to full council, that due consideration has taken place in an appropriate way. So what we've done is flagged something that's addressed before it gets to Cabinet, then Cabinet can take that full decision, and then we can move it to full council. I'm looking at officers to see if that would work, and they're shaking their heads, which is a bit unfortunate.
Can I suggest an alternative that you write to, on behalf of the committee, to Cabinet?
I can do.
That might make it easier.
I suppose I was thinking about a kind of trying to furnish you with an options analysis for, because that seems to be where we're wanting.
Yeah.
But almost in my mind, I'm kind of wondering in a practical sense how we might be able to do that. I mean, we could probably relatively easy work out what we would have charged had this thing, but that's almost kind of what the report sort of did anyway. It said you would have continued to charge it's roughly 17 million is MRP based on what we started with, and we also had £90 million over provision that we just took that off the budget, eventually took that off the budget every year to the maximum amount. So our 17, it started at 14 million, but roughly about 17, 18 became nil. And we continued to make that calculation, I suppose in the background, but retrofitting it back a year, I think we'd have to go away and see what potentially you could do, because it really literally is the bones of the calculation that changes within the policy, and it's just our way of saying, well, this is how we'd calculate MRP for across the asset base and the loan base. So probably in doing that bit, I think we might have to just see what we could provide.
So the other alternative we have, here we go again, is we could defer this to the next meeting and then bring the report to the budget meeting at full council. It's got to go through before the year end.
I think just for clarity, and Kevin and Rachel come in if I'm not incorrect, the MRP has already been decided. So that recommendation should be noted. Council is not going to be making a decision either. They will be noting it. I think if we want to do things differently for a future MRP and have more detailed options appraisals, officers can certainly take that away for the next time. But in relation to this report, and you can maybe highlight that, but in relation to this report, it will be a kind of an approval of the other recommendations, a noting, and we can take that away for future revisions when we're considering MRP.
Can I just come in, please? So, in terms of the actual MRP policy, the policy hasn't changed. We've just changed the calculation. So, what we previously used to do was break all the assets down into lives, into sections of lives, and use an annuity rate based on those sort of groupings of assets. So in terms of using an annuity rate, that is the same. What we've done is doing it slightly different calculation by using a weighted average life of the assets instead of breaking it down into chunks. So the policy hasn't changed from one year to the next. The reason this policy is extended compared to another one is because the new MRP guidance that's come out, and we are within the guidance, it needed more detail, and that's per this new MRP guidance that's come in from this year, is that you needed to do a bit more of an extended MRP sort of policy.
If it's the consequences, that is literally that calculation that Rachel said we used to do that supported all of it. That was roughly £17 million is the base MRP charge if we hadn't done anything. So that was your one option, and the other option was Link came in and did this piece of work that then split it down. Some of it was the fact that the regs were changing and asking us to do things in this way as well. So we expanded the policy, and within that policy, because the first thing we asked was, can we do this within the policy? Would we need to change the policy? Is it legit? We can get it through audit, because we know first thing we do is we send them the report because we knew they'd be looking. So we sent them the report, they did their audit and said it was okay. So it was within, Link assured us it's within the policy. So in the policy we've got, and the committee had approved, so it was within those parameters, albeit a very vague policy. There was enough scope within the existing policy for us to do it. We didn't need to change. So that bit was that. And the other bit was then, is it the right side of the regs? And will audit allow it? And we pushed back quite hard in the process with them to make sure that those two things were done. But it just, I can't change the financial effect was like we did last time, whatever, when it was 2017-18, and that said you've overpaid 90 million. This was a slightly different way of doing it, as Rachel's described, and it gave us this huge amount of money, really, that allowed you to do it now and voluntarily overpay MRP into a reserve.
That's what
it's not.
That's what we needed to understand. So, I mean, I think we should approve what's here, because the policy is there, but we need either a paper come back or something, so that we understand what the changes have meant in terms of risk and consequences.
So we've had a really.
That's my view. That might not be the chair.
So we've had a really good discussion on this. I don't want to try and draw it to a close rather than, I'm conscious of time as well, and we've got quite a meaty agenda. What we are being asked to do is recommend things for consideration by Cabinet. So I think if we recommend these things are considered by Cabinet, but attach a note about the point we've raised around it would be helpful if when the policy was reviewed, we'd had these options presented to us and we've asked for a report to be brought back to this committee to give us those options. I think we probably have a better understanding now following the discussion as a committee than we had when we started. And maybe that's the way we can move this one forward, if members are comfortable with that. I'm just looking at members. Are we comfortable with that as an approach? Yeah. Okay, are officers okay with that? Right. Thankfully, if people are happy, we'll finally move on to agenda item 10. But thank you, and particularly to Rachel, for your perseverance.
Thank you.
Right, so agenda item 10, which is the annual government statement. So yeah, the floor is yours, Simon.
Thank you, Chair. So this is the... oh, sorry, I should introduce myself. I'm Simon Straker, Internal Audit Manager. But I should say this is a corporate, not an audit document. This is the finalised annual governance statement for 2023-24, which members are being asked to approve. Members may recall receiving and noting the draft at the June meeting. But as the AGS applies up until the period when the annual accounts are approved, which you'll be considering, I think, later on the agenda, this has necessitated a refresh to maintain the context and reflect further ongoing progress in addressing the significant issues previously identified. This, in turn, has afforded the opportunity to reformat the content with a return to the previous style, building up to the issues to address, and has also enabled us to receive comments from GT colleagues too. So members will recall the purpose of the AGS that accompanies the annual accounts is to give readers of those accounts assurance about the control and governance framework in which they're compiled and to which they relate. Therefore, it's important to note that despite the scope for improvement identified later in the statement, overall, the statement concludes on page 2 that the governance arrangements have remained fit for purpose and are compiled within have complied with the Code of Corporate Governance. The annual review process of the effectiveness of the governance arrangements is described in pages 5 to 9 and has considered progress with issues outstanding in the previous statement 22-23 and concluded that those 4 that are shown in the table on page 10 have been sufficiently resolved to return to what might be described as a business as usual mode and therefore don't form part of the issues to address in the future. Further work and time to embed changes relates to those 4 issues in the table beginning on page 11. So that's effectively work in progress, if you like. And the table you'll see summarises the original issue, progress during the year, and further action planned and as regards to the remainder of this year and into the future. So just quickly to note those 4 outstanding issues relate to compliance with the housing regulator building standards, the key financial position of the council, data management and use, and this SEND safety valve issue. Finally, 2 further new issues have emerged from the annual review relating to the review or the need for review of the Code of Corporate Governance itself, as shown on page 15, and a second issue around accident reporting by management. Since the draft, ELT, the Executive Leadership Team, have reconsidered these issues and clarified responsibility and timing for action. And then the Chief Exec, the leader and the Chief Finance Officer have confirmed that the statements reflect the current position and have endorsed the statement. I'll go back to you, Chair, and any matters for discussion or questions or queries relating to the finalised statement.
Thanks, Simon. I'll open this up to members. Does anyone any questions on the ASG? Chris?
Thanks, Simon, for the report and for the really helpful introduction. I mean, I agree absolutely with your overall conclusion. I think we've got evidence to say that. I had a couple of kind of detailed questions. One of the challenges of this report, you have to kind of go backwards and forwards in time. So these may be questions that are more relevant to a 24-25 governance statement rather than a 23-24 statement. So the things that are still ongoing, item 1 talks about corporate oversight, addressing health and safety issues in housing properties and the complete buildings portfolio, but all the actions relate to housing. So I don't quite know whether there's any residual matters relating to the buildings portfolio, whether it should just refer to housing in the first place. I think it's good to see that still continuing, because obviously, from my perspective, not being heavily involved in the council, I think the issue we had with the heating scheme left me with some concerns about housing management generally, which might be unfair, but I think it's an evidence base, isn't it, that says actually we probably do need some evidence that this stuff is being dealt with properly. I could note what it says about MRP, but I won't. But what this report says about MRP is a bit different to what we've just heard, maybe. So I think colleagues might want to reflect on the language in that. But I think that kind of financial management piece obviously still needs to carry on. Again, my perspective is that the council has a recent history of habitually overspending its budget. So it's good to see that one of the actions in the 25-26 budget setting is significant additional funding for demand pressure. So hopefully that lessens the opportunity for overspends in 25-26. I think it's a really important step forward, both operationally and kind of culturally. I'm a bit nervous about the constant use of the phrase pressure, because I'm sure in some areas there are pressures and in some areas there'll just be overspends, and they're not quite the same thing, are they? So maybe there's some cultural and linguistic things around how we describe what's going on. And I suppose in terms of the new issues, and this may be a timing issue, I was kind of surprised that the capital programme doesn't feature in here as something that's of some significance. And again, I think that anyway, but I think some of the comments in the External Auditors report around the risks around capital programme might mean if it's not in 24-25, it certainly needs to be in the next one. Sorry, this is 23-24, it should be in 24-25 as a kind of big governance issue. So the committee and the council have got some oversight about how those projects are being well managed. But I agree with the conclusion. Thank you for the report.
Thanks, Chris. Just before I bring Kath in, just on the cultural and linguistic bit, I know there is a piece of work that's going to be done once we get past the budget setting, which is going to be fronted by Steve, looking at understanding of the finances across the whole of the council from a cultural point of view, because it's something that we have on our tracker anyway as an outstanding issue, and it is something that we've talked about a number of times in here. And I think we can all share examples of where we've seen things that have happened that perhaps, if people had a better understanding of the cost of various actions, would probably be addressed differently. But I'll let Kath.
I'm going to start at the end of the report. I do think, and it's one of the issues which require action, about accident reporting. And I wonder whether we ought, at this committee, particularly see any read-or accidents, just have the report and what was done about it. But also, you know, the next level down, which I can't remember what they're called, near-miss reporting. Because those, you know, if you get the actions on near misses right, then you reduce the near misses, but also prevent riddle. So sometimes the very fact that an officer has to write a report about accidents helps focus attention on it. And I just wonder whether we ought to see once a year, maybe, I don't know. But if there were, certainly if there were significant riddle accident, we ought to see that at our meeting. We really did. And so I'll leave that there for somebody to say yes or no. I'm hoping they're going to say, that's a good idea, we'll do that. The other bit, really, I mean, apart from, the housing stuff is fairly worrying. So I'm hoping that there's obviously a good programme to sort of try and sort that out, but I have to say, given an incident in my ward, in a council property, I'm not convinced that it's still being taken seriously enough. The other bit is, it's my sort of general worries, really. So what would be a significant governance issue is on page 9, and it's listed. And the fourth bullet, which is regenerate our towns and villages, to communities flourish. And certainly there is a huge capital investment, but it is in one place. It's not clear to me what the evidence there is to support that is being met satisfactorily. I will leave that hanging. And then the other point I'd make is on the following page 10, which is about decision making. Which says members' roles, this is an issue, and action has been taken apparently, and place-based working needed strengthening. Now, I am not convinced that has been fulfilled. Certainly not on place-based working, because decisions are made in regard to, in my experience as a ward member, regard to my ward with no consultation prior to that decision. But hey, and certainly don't listen to any views that we may have. And you see, the way we've changed, for instance, the planning committees has reduced member decision making. Now, there's arguments both ways, I'm sure, but I don't think they've been made here about governance. So those are the points I want to make.
Thanks, Kath.
Otherwise, thank you, Simon, for your report.
I'll ask officers to respond, but I think if somebody wants to come in on the accident reporting first.
Yeah, thank you, Chair. I'm Rachel Spencer-Henschel. I'm the Deputy Chief Executive. On accident reporting, I think we bring a 6-monthly health and safety report here, so we can certainly look at how we can increase that to pick up some of those key RID or reportable accidents and the near misses, because obviously, as you say, they're really important in terms of our overall health and safety oversight, so that's absolutely fine. Just wanted to pick up that one on the governance member roles and place-based working. You may recall that this has always been a bit of an issue because of the way that it's written, but it very specifically refers to the governance model of the council that was obviously picked up as part of the Democracy Commission subgroup that obviously gets regular reports here in terms of how we're delivering the recommendations that subgroup made in terms of better transparency, better scrutiny, etc. So what we hope in the recommendations that we've put in for future is that they're a lot clearer and hopefully with a lot more understandable milestones in there as per your previous feedback on this report.
Okay, are there any comments you wanted to make, Simon, in response to members as well? Is there anything you want to pick up?
Yeah, just a couple, Chair. Noting Chris's point about the building stock, I think the issue is now primarily a housing one rather than the wider corporate estate. Unless anybody else has a contrary view, I think the elapsed time since 23/4, because of the link to the accounts, necessarily leads to a point where, if we're not careful, we end up lapping ourselves, because we're almost ready to draft out the 24/25 statement. So I think collectively a view was taken that we ought to draw a line in the sand, which was, I think, around November time last year, and effectively, although the statement does cover the period up until the accounts are approved, to almost keep our powder dry perhaps on some of those other issues that are much more topical now, of more concern perhaps now, but really relate to 24/25 year, just to keep it manageable and simple.
Thanks, Simon. Just looking back at members, is there any further responses? We are being asked to approve this governance statement. Are we comfortable with approving that? Taking that as a yes? Okay, thanks, Simon. You can escape now, I think.
Hi, good morning. So, in terms of our ICE 260 report presented to yourselves, I think the key things to draw out from us on the accounts were we've not identified any material misstatements impacting on general fund reserves, and also on the MTFS. Nothing there that's come out. I think the key things that are impacting on usable reserves for the future, I think it's been good that they've been pulled out already, which is this capital programme that's planned over the years. And also the discussion we've just had on MRP. We have identified some adjustments and recommendations that are not impacting the budget position, which are noted in our report. Various ones of these impact the asset base, which obviously from our perspective is an important part of financial reporting, but doesn't impact the council's activities, usable reserves, services it delivers. And as Gareth alluded to, when we first joined this committee as the new audit team, some of this is down to just fresh pair of eyes in the team we are at GT, and it be these things being picked up. And whilst we would like these to make progress in coming years, we note that these aren't primary concerns of the council in terms of its budgets. I think also to note we started with a good relationship with the team and James and Rachel operationally. We've been pleased with that, and we'd just like to put on record our thanks to them and delivering the audit. We're hoping to sign off next week, hopefully by Friday, which is good in terms of it delivers before that key end of Feb deadline for the backstop. And that means that the council won't be affected at this year and continuing good arrangements in prior years. I welcome any questions, Chair, on our report.
Thanks, Greg. Just before I do open it up to members, I think it's worth just noting, the progress we have made with accounts again, and when you look across the country, the number of councils that are absolutely struggling to get their accounts into a position where they're able to be audited and signed off, I think we're in a really good position. I think we should recognise the work that the officers put in with support from our auditors to actually get us into that position. So it leaves us in a very, very good position as a council. But I'll now open it up to comments and questions on this. Kath.
I'll echo what you said about getting an audit report ready, because I mean, the last time I looked, there's only 20% of councils have up-to-date audit submitted. I think it's something like that, isn't it? Yeah. So it's a great credit actually to the council and the finance team and the auditors that we're able to do that. So, yeah. So whenever I moan about it in another place, I put my hand up and say, yes, ours do. So that's good. So the weaknesses on page 75 of the report, I think, pick up all the key issues that I think we partly have raised. Financial sustainability, SEND, and then the housing issue that we've just discussed. I've got loads of things that I think I've want to say, but I've made notes in the course of all this. The MRP that we've had a long discussion about I picked that up in your excellent report. So, which sort of meant I could link the two. So that was and be convinced that there's a problem. So thanks very much for that. Page 15, again, it mirrors an earlier discussion about it's the other risks, level of external borrowing, and I do think we ought to, at some point, somebody's got to think hard about this. And you've given a long commentary about what the level of borrowing and where it's being spent. The council should set up its own sensitivity analysis. Could quite like to understand more about what that phrase means, because I don't know if that means is what the rest of the sentence describes: overspends, additional borrowing, and potential for the George Hotel not going anywhere. I mean, that's basically what it's, untenanted rental void periods, etc. So that would be very useful to understand the concerns that auditors have, what the degree of risk is, which is what we're concerned about here, from this huge investment that is being made into one of our towns. I'm going to leave it at that because I've got other minor issues.
I was going to pick up on that as well. And I think one of the challenges we have as a committee is that we never see any of the detailed finances behind any of these investments. We talk about the business cases. By sensitivity analysis, I assume we're looking at scenario planning, and we've got a range of sensitivities about what the outcomes may be. But we never see any of that. So as a committee, it's really, really difficult for us, because how do we satisfy and reassure ourselves that these decisions that have been taken are correct and appropriate without any evidence? All we have, to be fair, is the word of officers and cabinet members that have sight of those business cases. I think that's one of the challenges we have.
So I'll let Greg come in a moment, Chair. I think that's a really good point. So, you ultimately, as the audit committee, need to be sure that there's appropriate sort of procedures and processes in place around these big capital decisions. So, certainly in other authorities where I've worked that have undertaken significant sort of town centre redevelopment with similar levels of borrowing and similar potential upsides and similar potential risks, that particular audit committee did receive quite regular periodical updates around, the construction, the level of borrowing, the progress on delivery, all that type of stuff. So, that may be happening potentially elsewhere in the council, but certainly you as an audit committee, in my view, should have an oversight over that to make sure you're comfortable with that. In terms of some of the detail, I'll bring Greg in a moment, but I suppose I just wanted to emphasise 2 points generally in relation to this report that we have already touched on. One is that whilst we have found some adjustments and issues, that they're not ones that impact on usable reserves and sort of Kevin's MTFS looking forward, so that is an important point. And then secondly, I don't think you can underplay the fact that you're not going to get captured by the backstop in terms of a disclaimed opinion, because that is a massive issue nationally. So keeping Kirklees outside of that position is a really significant point, which you as a committee and finance colleagues, should be really pleased with, because once you're in it, because I'm inheriting a couple of authorities for the first time this year that have had backstop disclaimers under the backstop that occurred pre-Christmas for old year audits, it's going to be an awfully long process to get them back to a clean accounts opinion, and that's mirrored right across the country, Chair. So, you know, the fact that you're not in that position is a really key point, and obviously myself, Greg and our team, and Kevin, James and the finance team will be working together in future years, because the backstop does start to slightly come forward, as we've put in our report. You know, in another year's time, it's January, and then it moves back to within the calendar year at the end of November, and it'll be really important that both sides, plus you as a committee, you know, work to ensure that we keep you in that position and you don't ever get captured by it, because once you're in it, it's not an easy thing to get out of. So I'll just pause at that point, Chair. But Greg, I don't know if you want to come back in on Councillor Pinnock's particular point on the sensitivity stuff.
Yeah, so I think firstly to note, this one was very much a forward-looking risk in a sense, and I think that's noted in officers' comments. I think principal risk we've observed here is a lot of these business cases get approved at a point in time when the wider economy, macroeconomy might be in a certain place, and that obviously evolves over time, and it's understanding that as that evolves, is that being recaptured in the business case, such that if there isn't an appetite for new cinemas or something in a sector, what does that mean for the council if it were to develop one, for example? I think this sensitivity analysis looking at, well, if interest rates went up, borrowing costs went up, for example, what would that mean? Is that within headroom? If there are capital overspends and that's funded by borrowing, that would mean additional borrowing. What's the revenue cost of that, for example? Additional MRP in the future would then come into play, and what would the headroom there be? So I think it's looking that if things don't, and I think another one, sorry, to add in is if it was untenanted for a period, what's the revenue cost there for almost funding the borrowing cost, the electricity, water bills, utilities, etc. So it's looking at if there was some adverse potential in this, what would the impact be on the council's, say, revenue budgets that isn't ring-fenced within capital, and could that be managed? And you know, and how would that look? I think that's the point we're trying to ask for really with this one.
Chris?
Well, just to add my kind of thanks and congratulations to James and the team for getting the accounts done on time and to a high standard, and thanks to audit colleagues for completing the audit. I've got some questions on the significant weaknesses, but I guess we'll get to those when we do the VFM report. I just wondered whether the committee should know, needs to know or can't know what the two public objections were, and what impact that might have on the actual final closure of the audit, because they can take forever, I guess.
Let Gareth answer those.
I think the point that Councillor Pinnock raised around the item on level of external borrowing goes to a couple of points. One, I've already raised, I think the capital programme should be a key theme of the governance statement going forward. Second, we did consider and decided not to ask internal audit to add the capital programme to its audit programme. I think that was a mistake, because I think there's a whole range of issues in that work that needs to be addressed by audit at some time, and it'll be over a long period. There's a number of items that are kind of amber in your report, and I guess looking at them, MRP being one, some other things around asset valuations, unless there's some national change in policy, my guess is they're going to be amber forever. Which leaves me a bit unsure as to what we as an audit committee should be doing, because normally when I say amber things I want them to be green, but I think in this particular case they're just going to stay there, which makes it a bit unhelpful looking forward. So I think we've noted those points, and you know, I'm inclined to agree with management on the asset valuation points. I think I'm still to be persuaded on MRP, but no one's saying it's wrong, so we'll live with it as it is until we find a different way. So I just wondered from the auditor's point of view, what we as an audit committee are supposed to do with those amber items.
Yeah, thanks, Chris. So I suppose just turning to the 2 points in there, I think one was around the objections and one around the amber scores on PPE and investment property valuation. So on the objection point, the two objections are essentially the same objection, pretty much word for word, and they are around the investments via the sort of pension fund, around whether they are following from the objector's point of view, an appropriate sort of green or environmental angle. They were a coordinated national objection that's impacted a number of authorities right throughout the country, North, Midlands and the South. And as such, within Grant Thornton, we have a separate team that deal with objections, and they are coordinating things with relevant bodies and legal organisations and with the other firms that also received the same objection. You're absolutely right, some of these things do take quite a bit of time to finish. We're satisfied there's no impact from our perspective on the accounts, which is why from our point of view the council can still sign the accounts, and I can still issue my opinion on the accounts with the target date of next Friday. But the audit certificate bit of our opinion will remain open until those points are resolved, and obviously I'll keep Kevin and you as a committee updated in terms of our team that are liaising on that. In terms of the ambers on investment property valuations and land and building valuations, you raise an interesting point there, Chris, because I think you made reference to these being sort of key areas of focus for us, and they are. We've certainly spent an awful lot of time around valuing those two areas and auditing those two areas. We use our own auditor expert on that point, and in addition with the pension number, they are two particular areas where the audit regulator is very keen that we do a lot of detailed work on them. There is a separate question if that is the right focus of audit resource, given external audit resources nationally are very scarce. There's the backlog and all the rest that you mentioned, Chris. Should we be focusing on two areas that, whatever adjustments we may find, they don't ultimately impact on Kevin's MTFS position? And there is a wider debate that there may be some changes, but until the audit code changes, until the audit regulator's views change, auditors will still end up doing a lot of work in those areas. How do they get back to green? I suppose, obviously, actioning the recommendations in relation to those areas, and when we do our detailed review next summer and next autumn in the 24-25 audit, if we weren't to find any sort of significant adjustments in those areas or control findings, then there's an argument to say that they may move back to green. But it does involve a lot of assumptions in terms of the council's valuers, the management's input to that, our auditor expert, and little changes in those assumptions can lead to material differences in valuation. So it's not untypical to have those areas as amber from my experience. But I suppose the key point I would say, particularly on normal land and buildings, is that they're not going to impact on the MTFS position. I think it's slightly different for investment properties, where obviously the council's made an investment solely for either capital appreciation or rental income, and if there is a significant decrease in those assets, then that is a problem when you've taken out borrowing for it. But from a land and buildings point of view, any adjustments there on schools and things like that, they're not ultimately the thing that's probably keeping Kevin awake at night, but nevertheless it is an area that we need to do in detail, given the way that the accounting standards and the codes are prescribed. Thank you, Chair.
So I'll put the microphone on. Are we comfortable that... Yeah, go on, Greg.
Just want to go back to the reference to the cultural heart. The way we're structuring it, because it's been phased, every time there's any changes or we need to move to the next phase, there's a cabinet report, and it also goes through the scrutiny panel for economic growth and region. So it's been scrutinised all the way through those two processes. You might not be discussing, as I think somebody pointed out, you've taken the capital plan off this committee. So it going through the other process, where it should be going in some ways. If we're not discussing the capital plan here anymore, then that's the right place for it to say. Every time there's any change, or we need to move to the next phase, there's a huge great report comes with all the details in there. So those are available, just not here.
My understanding is that the detail of the business cases is not disclosed. Certainly not disclosed at Cabinet. I don't know whether scrutiny members have sight of that information. And that's my point, is there's very limited people who have sight of what that business case looks like or what the underlying assumptions are or the positions we're taking at that point in time in them.
The financial details are subject to commercial sensitivity, as quite often is the case with lots, not just the corruption out of many buildings, etc. So those are the only things that are kept private. The commercial sensitivity items are kept private. Everything else is in the public domain, as is the original business case, which runs to several thousand pages.
As I say, that's my point. It's the commerciality, the figures that are in there, the business case, what makes the business case stack up, that we're not able to have any sight of, and therefore what confidence, what assurance do we have as a committee that the right decision is being taken based on information, or what that information looks like, what the assumptions that are built into that, etc. We can't assure ourselves of any of that because of the decision taken. You could take a decision that perhaps that some of that information was shared in private. Admittedly, it's commercially sensitive, so it would need to be shared in private. But that's an approach that could be done to give that assurance, should we wish. I think Sam wanted to come in.
I was just going to say that it's within the gift of scrutiny to have a private session and to make a request to have to look at that private information. There are regular updates on the cultural heart that go to scrutiny. There just hasn't been any form of request for it. But if they were to request it, there isn't any reason why scrutiny couldn't have that information. In terms of this, the scope of this committee, this is around the governance around it and the process and the procedures that we've got for overseeing the capital programme. The decisions as to who spends what and where is for Cabinet, and scrutiny scrutinise Cabinet's decisions, and they have an ability to request private information.
Thanks, Sam.
I mean, we've had this argument many times, not with Sam.
The first time for me, Councillor Pinnock.
That Audit Committee has a responsibility. If auditors have raised issues, which they have in here about significant financial weaknesses, that we ought to be able to be informed so that we can see the audit and risk issues concerning those financial weaknesses. And scrutiny has a separate role. Now, I mean, personally, I don't like this Cabinet scrutiny audit because I think everything falls between the cracks. Between the cracks. But we have a role in this, and which I have argued before, and I hope perhaps at this stage we can have a role in an audit role of risk and being confident that decisions have been made appropriately in this area. So that's it, really. I think we should. And if we don't, and things go wrong, I should say so.
Thanks, Kath. I'm going to bring James in.
It was just, I mean, I'm not sure how relevant this is, but it just struck me that when I look at this and then I look at the annual governance statement that we just looked at, when it gets to the section on Cabinet, it said no risks were identified at Cabinet in this year or whatever it was. But then in here, we've got this risk on external borrowing. Now, I know that Cabinet are looking at those things because, as Graham says, they get reports all the time, for example, on the cultural heart about and the decisions change. You know, we hear it in the press, they've taken some money out of this, or they've reused it for this, or they've decided to scale back this element of it because we can't fund it, etc. So we know that's happening, but maybe there's just a misconnection there, because if you just read that annual governance statement, you say, well, they've identified no risks at Cabinet this year. That's what it says. Obviously, they must have done. The amount of reports that were there. So I don't know, it's just maybe it's just the way that it's reflected in that report. It doesn't necessarily mean, you know, it's only a very brief summary, but I don't know, it just read a little bit, just didn't quite connect together for me.
Thanks, James. All right, are we going to draw this discussion to a conclusion? On this agenda item, we're just asked to note the report. Are we comfortable with noting the report? Yeah.
some audit or reports are better than others, and this is a good one.
Thanks, Kath. I'm taking that to the committee's content, and I'm going to move us on to agenda item. I'm conscious of time, so I'm going to move us on to agenda item 12, if I may. So who's introducing this one? Is it James? James?
Thank you, Chair. This one is the final approval of the annual accounts and a letter of representation. So it falls on the back of the two reports you've just heard. So the AGS that Simon presented, that forms part of these statutory documents as well. And yeah, and obviously the audit have highlighted where they're at. So as far as we're concerned, we're all working to, well, by next week, from what Gareth said earlier. So yeah, we're pleased with that we're here, and it's well before the backstop, and work's nearly done. Normally, when years gone by, we've kind of aligned it to the meeting, but I think it's drifted away from that now. So what we ask for is delegated authority for the chair to sign once audit have completed their last bits, hopefully next Friday. The letter of rep is a standard one. It's provided by Grant Thornton for us just to put on our letterhead. So if there's any questions, beyond that, it's just really to say thank you to, I come and present it, but the glory of it all is Rachel's team, who've been working incredibly hard, and probably for about 7 months now doing this, the accounts and the audit. So thank you to them formally from me as well.
Thank you.
Right, I'll open this to members, and I just echo comments James has made about, and we've made earlier in the meeting again, about how well the team have done to get us to this position that we're, ready to sign off the final accounts. Are there any questions from anybody on the actual accounts? Chris?
Not questions, just observations, I suppose, really. And one bit which I think is an error, and apologies for raising it now, not having sent it to you earlier. So on page 151 of the report, page 8 of the accounts, I just wondered why we compare the outturn with a revised budget in this document, not with the original budget, and whether that might give readers, if there are any readers of these accounts, a more clearer picture of the council's financial performance. I'm not suggesting for me that you change them this year because you don't need to, but I do think it would be more helpful if we had original budget, or maybe just the headings wrong. On page 87 of the accounts, I think something's gone wrong, or I'm misreading it, with the employers' pension contributions for the Strategic Director Adults and Health, because that row doesn't add up. And I can't believe the pension contributions were 122,000. But anyway,
the amount of people who checked that document, I was like, wow, we've all missed it. We'll have a look at that one. Thank you. So page 87.
Yeah, and finally on page 88, and again, it doesn't really change the accounts, but I do think it's a kind of governance and financial control conundrum as to why the council would employ senior directors off payroll. Just seems a bit odd to me, and the first time I was aware that Isabel, who gets named when others doesn't, which is also a bit odd, wasn't paid through payroll. I think there's a audit governance question there that's not for the accounts. It doesn't change the accounts, but it just seems a bit odd that such senior people wouldn't be on the payroll, to me at least. That's not your point.
Yes, I couldn't particularly comment. It is Isabel. I think we made reference only to being section 151, and I presume it's just because she came in as a contractor, it would presumably suited that level of transaction, being a contractor who would come in off payroll as, well, presumably within their own HMRC guidelines around being employed by someone or not. But it's probably the way she was structured to operate more than our decision. But thank you for the other points, Chris. We'll get looking at them.
Thanks, Chris. Any other members wishing to come forward? We are being asked to make 2 recommendations. So if I draw your attention to page 137, which is the first page of the covering report. So we're being asked to approve the statement of accounts, including the annual government statement, and with the chair of Corporate Governance and Audit, myself, certifying responsibilities on page 19 once the audit is concluded next week, and also that the draft letter of representation were approving that I can sign that on behalf of the committee, again on completion of the audit. Are members content with that? I'm taking that as a yes. Thank you, James. I think that concludes item 12. And now we move on to item 13, which is, yeah, come on, Gareth.
Thanks very much, Chair. So this is the Auditor's Annual Report for 23-24, or the VFM report, I guess most people refer to it as. It summarises the key findings from our work on VFM. At Grant Thornton, over the last few years, we've built up a separate audit team that essentially focus on VFM audit work and deliver the work. So our colleague, Jeanette Beale, has led this work. Unfortunately, Jeanette couldn't be here today. She sends her apologies. But Greg and I obviously work in conjunction with Jeanette and Jeanette's team on this particular document. It is quite a detailed report, so I'll just draw out some of the key points, I guess, from the executive summary, Chair. So I suppose the headline message to you as an audit committee is that we have raised 3 key recommendations, which are, you know, those that highlight areas of significant weakness in arrangement. So again, just to reiterate, Chair, there are 3 types of recommendation we can raise in our value for money work. So at the low level, where essentially enhancing or tweaking existing arrangements, that's an improvement level rec. We then have at a more significant level a key recommendation, of which we've got 3 in this report. And then the sort of real nuclear level, if you like, Chair, is a statutory recommendation where something's fundamentally gone wrong and pervasive across a local authority. So just to be really clear, we've nothing in terms of statutory recommendations at Kirklees. However, we did think it appropriate to raise 3 key recommendations. Now, those 3 areas probably won't come as a surprise to members of this committee. 2 of them are essentially an ongoing key recommendation from previous years. So one around, I guess, the overall general financial position of the council. We know the council's under financial pressures or overspends, to quote Chris's comment earlier, in conjunction with a number of other sort of upper tier, single tier councils across the country. It's not uncommon to see the sort of level of savings requirements, pressures around the level of financial reserves, and that you know, those issues sort of in the medium-term financial strategy. So essentially that key recommendation from the prior year we think is still appropriate to raise. We're aware from discussions with the Chief Exec, with Rachel, with Kevin and other senior colleagues of you know, actions the council has taken, the plans in place to, I suppose, enhance the council's financial position, and we'll be discussing with senior officers throughout the remainder of 2025 as to the progress and implementation of those, and obviously our comments will be reflected in the VFM report for next year. DSG is the second area, the dedicated schools grant. So again, council not uncommon to be in a significant deficit position when you look across other metropolitan councils that we audit. You are part of the safety valve programme, which has obviously allocated additional funding to the council off the back of gaining access to that particular programme. Having said that, obviously the council's gone off track on the initial plan. It's had a revised safety valve in place, and again, things are also off track on that one. We are aware that the council is in a lot of discussions with Department for Education, and again, you know, from our perspective, we think it's appropriate to leave that as a key recommendation. It will be an area that we have as a standing item on our agenda in discussions with Kevin and colleagues to track that progress through the coming years. Just to say on the DSG point, you know, there is a statutory override at the moment, Chair, which we've talked about before in this committee, which means that essentially the deficit isn't called against general fund. That in theory could run out in 26-27, but it's highly unlikely, I would say, Chair, because if that happened, there'd be Section 114s across the country, given the state of some of those deficits across the piece. You know, there's significant cumulative deficits on DSG across the country, which, you know, it would be highly surprising, shall we say, Chair, if that statutory override wasn't extended. And then the third area is, I suppose, the new key recommendation in relation to 23-24, but probably not a surprise to members of this committee, which is really linked to the social housing regulators report on the council. And one of the requirements of the National Audit Office's Code of Audit Practice for VFM work is for external auditors to take into account the reports of other independent regulators on your audited body, in this case Kirklees, and obviously that was a key report from the housing regulator, which again we thought appropriate to draw out in this particular report as a key recommendation. So those are the key findings. In addition to that, there are you know, smallish number of improvement level recs. All of these will be followed up as part of our 24-25 VFM report. Last thing to say on VFM audit is that we will be concluding our VFM work by the end of November this year. So essentially this report was concluding and the VFM work was finished for November this year, but it will have to be reported by the end of November this year. There's a requirement for that to be in place. So I'll pause at that point, Chair, and obviously have to take any questions you or the members may have. Thank you.
Thanks, Gareth. I'll open it up to members. Oh, Graham.
Yeah, I just want to thank the auditors for this report and thank the officers for working with them on this. I think it's interesting to note that we've got whilst we have three recommendations, these are not unexpected. We've all known about these. The SEND issue, as you rightly pointed out, is a national issue, and I agree, nobody's going to pull the plug on it because every council in the country would immediately issue a Section 114 notice. And you're right, we're still not quite where we need to be, and there's still a long way to go. But these things take time. It's a huge part of our organisation. It's very complicated. There is the plans to invest in 2 new special schools, which will take some of that pressure off, but that is a few years down the line. But so we are taking proactive action to try and mitigate those risks and make sure we have the right provision for our young people here in Kirklees, not keep sending them out of areas. So those will improve the SEND situation, but it does take time to build new schools, as you'll appreciate. I'm not going to necessarily talk about a lot about the financial position because we're obviously in a budget process at the moment. It would be probably remiss to talk about that, but we are hoping we'll strengthen our position when we bring a budget forward for discussion in March. And again, housing, we would have known about this. We self-reported ourselves. We knew we had an issue, so we actually walked towards the regulator. So again, nothing we didn't expect, and great progress has been made. Again, more work to do, but we are making good progress on that. So thank you very much, and it's good to see that the things that you didn't find anything that we didn't know about. I think that's what I'm pleased about, that we haven't missed anything and we're doing all the right things and identifying where we've got a problem and putting mitigation in place.
I'll open it to members now. Anyone, Chris?
I suppose on the financial sustainability, this is the third report we've had with a significant recommendation broadly the same. I just wondered what you would expect to see when you're sat there next year that would have got us to a better place. So we've got something as an audit committee to monitor.
Yeah, it's a good question, Chris. So I think we'd look at things in the round in terms of the overall financial position. So what was the position regarding the outturn against budget? What was the level of savings delivered in year versus the original plan? looking more broadly, you know, where did you ultimately end up on your performance on, you know, the DSG position on the safety valve? You know, what's the position in the MTFS regarding the level of reserves? Because obviously Kirklees is towards the sort of lower end of the scale in terms of metropolitan councils. So I suppose essentially we'd be looking to see if there was tangible evidence that the council's financial firepower, if you like, had increased when we come and look at this review next year. Now, you know, as has been discussed, you know, some of these things do take time. We're aware that councils initiated, you know, actions and plans to, suppose, strengthen the financial position, but these are not an overnight thing. So, you know, in terms of where we're probably going to be as at November this year's audit committee, when the 24-25 VFM report comes in, you know, it's you know, it's difficult to give a view at this stage as to whether that significant weakness key recommendation on the overall financial position would be improved or downgraded to an improvement rec, for example. But, you know, if we can see that the direction of travel is there and you're delivering as per, you know, what you've committed to do in the budget, then that obviously enhances the council's arrangements and gives auditors a level of confidence and assurance that, you know, you're budgeting accurately and accordingly. And, you know, we'd have that discussion. And obviously, I'm sure, you know, Kevin and the rest of SMT, when we start to do the detailed work on this in the summer for 24-25, you know, they will be in a position, I suppose, to tell the story around the financial sustainability, if in their view they think it's significantly improved, and we can then obviously take a view on that and look at the evidence that sits behind it.
Yeah, come back, Chris, if you want.
No, I'm happy. I said a couple of other things. So on page 317 in our pack, so I think page 21 of your report, it says that you've considered how the council approaches and carries out its annual budget setting process, which has got a green assessment, which, to be honest, I was a bit surprised by, given what you'd said in previous narrative about did not fully anticipate or incorporate pressures and things. So I'm trying to get to, in the previous question, whether you think our challenge is budget setting or financial control in year. Because they're two different issues, aren't they, that will be resolved in slightly different ways.
Yeah, it's a good question, Chris. So I think on the page 317 point, I suppose this is looking at the you know, the governance that sits behind, I guess, you know, the annual budget process and the setting of this, the engagement with residents, you know, going through the necessary governance steps within the council, that from our perspective as a firm and the VFM team, you know, didn't see any particular issues in terms of the governance of it, if you like, versus, you know, the actual numbers, I guess, in the budget, which is probably more relevant to the financial sustainability theme. So I appreciate it is a bit of a, I suppose the way that the audit code is written for VFM, it could lead to a bit of a disconnect between why is that green, but you've raised a red risk on financial sustainability. So I suppose that's looking more at the, you know, the council's, I guess, constitution and approach to setting the budget, engaging with stakeholders point, which looks reasonable and no key issues identified, versus obviously the variances against budget that we've picked up and commented on in financial sustainability.
So we talk to all the right people, just get the wrong answers. Is that what you're saying? So I've got one more question for you, then I'll shut up. Sorry. Okay.
Yeah. Thanks, Chris and Gareth. So just on your point about budgets and looking forward, I think there's members will have seen in the proposed budget that was produced in December, but also the one that's going to be published on Monday. We've taken a conscious decision this year to recognise pressures, overspends, whatever term we choose, and there's probably over £50 million going in to tackle demand, inflation, across, particularly across social care, temporary accommodation. So whilst we can never give guarantees that those numbers are absolutely right, I think the process of putting more robust budgets in place should reduce the number and the value of the overspends next year, which should go part way to answering Gareth's point about looking at overspends and towards sustainability. Beyond that, I guess we're still in the bit of the unknown because we'll see what the multi-year settlements bring. So, yeah, hopefully that clarifies some points there.
Chris?
Yeah, I think that's really good to hear. I'm sure that's the first stage in re-establishing that strategy and delivering the improvements. Just one final question for the auditor, sorry. On page 328, you've considered how the audited body evaluates the services it provides. I'll paraphrase. There's nothing wrong with the commentary, but it doesn't address that question. It addresses a different question, which is, have we got some services that are good and some services that aren't good? So I just wondered what your views was on how the council evaluates its services. So page 27 of your report. Sorry, I was giving you the page number from my pack and it might be different to you. So the bottom bullet point talks about how you've audited how the council evaluates its services, and your commentary tells us things we're good at and things we're not good at, which isn't answering the question, is it? Or is it?
I think on that point, we have, I suppose, linked the social housing regulator report, as that's an independent external body commenting on, I suppose, an area of the council services, which in our view has obviously highlighted significant findings and therefore we've raised a key recommendation. And also, from a balance point of view, another external regulator's, done a review in terms of Ofsted and given a good rating, obviously an improvement on the previous one, which requires improvement to be good. So, I suppose I take your point that we've not directly commented on the council assessing its own services. We've commented in terms of independent external bodies commenting on key services delivered by the council, one of which has obviously given a positive outcome and the other one has given a more critical outcome. I don't know if there's anything, Greg, I'll let you come in.
Yeah, thank you for the question, Chris. I think part of this links back as well to the non-financial performance summaries that are being produced for Cabinet, specifically during the year. I think we've seen some of those done in 2023-24, the year we've audited, but it hasn't been consistent throughout, and I think it's played into other areas as well. For example, on the narrative report where we've asked for those non-financial performance, the data hasn't been there to back it up to include. So I think a wider recommendation, while not formally documented as an improvement rec, is obviously for those to be produced consistently to then identify that and be able to take relevant action in following years.
Content, Chris?
The comments about benchmarking I thought were worrying, but I'm glad they've been picked up on page 316.
Thanks, Kath. Right. So we're required to just note the auditor's annual report. Are we comfortable with that? Right. Well, thank you, Greg and Gareth, for that one. We move to the final item on the agenda, which is the agenda plan, item 40, which is in our packs. It's there for information, and again, any questions anyone wants to raise, feel free to raise them with me. But other than that, I'd just like to thank everybody, members, officers and guests, for your contributions today. and see you all at our next Corporate Governance and Audit meeting in February. Thank you.